All right, let's just jump right into this explainer because today we're going to completely reprogram how you look at every single purchase you make. Seriously, we're tackling the one major concept that literally separates the wealthy from everyone else, and it all revolves around one incredibly powerful heuristic: opportunity cost. By the time we wrap this up, I promise you, you'll never look at a price tag the exact same way again.
So can you really afford it? We all do this, right? You look at a price tag, pull out your phone, check your banking app, and if the cash is sitting there and checking, you're like, awesome, I can afford it. But man, that is such a dangerous trap. It is driven entirely by instant gratification. Just because you have the cash right now absolutely does not mean you can actually afford the purchase. Our brains are basically hardwired for the present moment, which makes us, well, incredibly blind to the hidden long-term costs of our daily financial decisions. Just look at the stark contrast here on how different people think. Average earners operate purely with a consumer mindset. They ask, can I afford it today? But wealthy individuals, they use a completely different heuristic. They think like owners, not consumers. Instead, they ask, what does this cost my future self? They realize money isn't just, paper you trade for immediate status. It represents future options. When you make that shift from consumer to owner, you stop trading your cash for stuff that loses value, and you start prioritizing assets that actually generate passive income. But to understand why making that shift is so unbelievably hard, we have to look at the psychology. There are basically three traps acting as these invisible emotional leaks. They quietly drain your potential wealth, while you think you're just, living a normal life. First up is lifestyle inflation. You finally get that promotion, a nice raise, and suddenly your expenses just magically go up to match it. You upgrade the car, you get a nicer apartment, and boom, you stay perfectly broke. Second is social comparison, buying flashy status symbols purely to impress people you probably don't even really like. And third, instant gratification, choosing temporary comfort today over your future financial growth. These traps practically guarantee that no matter how high your salary gets, you'll never actually build real wealth. To really see this in action, let's look at a pretty brutal reality check. Just a seemingly harmless, everyday $100 purchase. Think about the last time you dropped $100 without even a second thought. Maybe it was a new pair of shoes, a nice dinner out, or just a quick tech upgrade. In the moment, it feels like absolutely nothing, right? I mean, it's just $100.
But here is the massive flaw in that thinking. Because of uninterrupted time and compound interest, spending that $100 today does not just cost you $100. If invested over a few decades, it grows into thousands. The real cost of that dinner or those shoes is the potential wealth you literally just lost forever. When you spend today, you are practically reaching into the future and taking thousands of dollars right out of your own future pocket.
So why is the opportunity cost so dramatically high? Two words: compound interest. Your initial capital earns steady returns. And then, here's the magic, those returns earn more returns. It is not a straight line. Time acts as your ultimate leverage here. It starts deceptively slow, right? Almost invisible in those early years. Honestly, that's exactly when most people quit, during that flatline phase. But if you have the patience to just leave it alone, it explodes vertically to build massive, life-changing wealth. Time is an absolute advantage, but obviously only if you actually put your money to work.
Okay, so the absolutely crucial point here is that you aren't just losing cash when you buy something you don't really need. No, you are sacrificing your future options. You're actively feeding this endless cycle of living paycheck to paycheck instead of just buying your own freedom. Think about it. You can always make more money, right? But you can never ever buy back the time required for that money to compound. So every single time you tap your card, you are making a conscious trade-off between a brief moment of pleasure today and your ultimate financial independence tomorrow.
And honestly, the best part of all this is that you do not need to be rich to start capitalizing on that time. It's exactly like a snowball rolling downhill. Small, consistent amounts invested early will easily, effortlessly outperform massive amounts invested way too late. An early saver who just invests tiny weekly amounts is going to consistently beat someone who waits decades and then tries to dump in huge chunks of cash just to catch up. The snowball needs the length of the hill, the time, to accumulate all that mass. So don't wait for the perfect timing or until you have, thousands to spare. Your small, daily financial wins are what actually build massive wealth over time.
What we're essentially looking at here are two identical earners on completely diverging paths. The broke mindset demands instant results. It's buying depreciating status symbols, like, say, a brand new luxury car that loses 20% of its value the literal second it drives off the lot just to look successful. But the wealthy mindset, it embraces delayed gratification. They know that looking rich is actually what keeps you broke. Instead, they quietly build real, boring, consistent assets to guarantee their future freedom.
Actually, the truly wealthy are often totally invisible. They prioritize peace and ownership way over appearances. Now, look, understanding all this math is great in theory, but we run into a very real human problem. Willpower is just a highly unreliable resource. When you get tired or stressed or emotional, your strict budget completely breaks and boom, those impulse purchases happen. So, since we already know human discipline eventually fails us, how do we practically short-circuit our emotional spending habits? How do we stop making these repeated micro-losses?
Well, let's implement the 48-hour rule. This turns our new heuristic of opportunity cost into an actual, tangible procedure. The next time you feel an urgent need to buy a non-essential item, maybe it's one of those online flash sales screaming, "Only 2 hours left." Just stop. Wait exactly 48 hours. By forcing this delay, your emotional high completely fades away and your logical thinking actually returns. After 2 days, just ask yourself, do I still really need this? Is this even going to matter next week? Almost every single time, the answer is no. You completely forget about it, and you've seamlessly saved your money.
To take it a step further and really protect your future self, you've got to completely remove daily decisions. Average earners pay their bills, spend whatever's left, and then try to save the remnants, which, let's be real, usually equals zero. You need to reverse the flow. Route your money before you can even touch it. Pay yourself first. Automate your accounts so that the exact moment your paycheck hits, a set percentage funnels immediately to savings, and another channels straight into investments. Pay your bills automatically. Then, and only then, do you look at the leftover money. That remaining cash, that is yours for completely guilt-free spending because your future self is already fully protected.
Smart systems beat raw discipline. That right there captures the entire philosophy we've been diving into today. The wealthy do not wake up every single day and test their willpower. They aren't trying to outsmart their own emotions. No. They intentionally design automated decision systems that run silently in the background over decades. Motivation is emotional, it's temporary. But discipline is structural and permanent. When you set up automated systems, your wealth builds silently, completely protecting you from your own worst financial impulses.
So we've broken down the psychological traps, the mind-blowing math of compounding, and the actual systems you need to protect your wealth. The next time you pull out your wallet, I really want you to remember the brutal math of that $100. Remember that you aren't just trading paper, you are trading your time, your future options, and ultimately, your freedom. Before you tap that card, ask yourself, is the temporary comfort of today really worth what this will actually cost your future self tomorrow?